back to another confrontation. Today, we get to find out what Lynette Zang thinks about Trump, recession, gold, Bitcoin, markets, stocks, maybe even some real estate. We've got a lot to talk about. We know we love talking about the economy. And I think it's been probably somewhere around 2 years since we've last had the honor of chatting. So welcome on back. Thank you so much for being back.
Thank you for having me, Kevin. It's been too long. We can't make this long the next time.
Absolutely. So what is Trump going to do to us? That is what everybody wants to figure out, and I want to hear your opinion. What do you think?
I believe that he is ushering us in to the next monetary system. And I'm not talking about the Bitcoin reserve. I'm talking about the big, huge crisis that's needed to get everybody to say, save me, Mr. Bill, save me. That's what I'm talking about.
Oh, interesting. So you think people are going to be panicking here at some point in the future, and he's setting himself up to be the savior?
Well, I don't know that obviously he would set himself up to be the savior. I'm not saying he's the savior. I said he's the usherer. Right?
Oh, interesting. Okay, so tell me more about that. So is that because of the uncertainty of tariffs? And is there this potential risk that this new regime movement could take many years, in your opinion, than it sounds like? I mean, he just started a 4-year term.
Well, I don't think that in fact, I know this did not start just recently. And understand, Kevin, I've been studying currencies and currency life cycles since 1987. That could even be before you were born.
It is.
And what you see is these repeatable patterns. And so there are, when you recognize them like I do, and let me just kind of back up to move forward, right? I mean, I'm 70 years old. My granddaughter just turned 10. You are not going to look at me and go, oh, maybe she's going to be 10 or 11. You're not going to look at her and go, well, maybe she's going to be 70 or 71. And so what you really do need to understand is how to look at a life cycle. And when I'm looking at the life cycle of the fiat money experiment, this big experiment, right? What I 100% know, because I see all the patterns, is that we are at the very end of this experiment. And of course, when one system dies, then another one rises up to take its place. The system actually died in 2008 and was simply put on life support to develop the new system. And I don't think that it's any coincidence or accident that Bitcoin was born in January of 2009 and quantitative easing. But I just don't think it was an accident that quantitative easing was born in March of 2009. Because if you look at the government NSA white paper that was published in 96, you see the outline of it. So they know how to make these transitions from one system to another and get people to comply without even realizing it. And I see all of those signs. So what I'm saying with President Trump, we were already in an extraordinarily fragile and vulnerable position, because I don't even really know how long we've been compounding interest on the debt. But what I do know is that when you look at the two largest buyers of the Treasury bonds, which is the global foundation for all of the markets, the 10-year Treasury, and when you look at China and Japan, they started liquidating and not buying as many treasuries. So their holdings have dropped substantially and regularly and consistently since 2013. That's a very similar behavior that we saw in the 1960s in the run up to Nixon taking us completely off the gold standard in 71, where governments were sending in their dollars and pulling the gold out of the system. So much so that by the time Nixon closed the gold window, which sounds so simple, but basically handed over control of inflation completely to the private central banks, we had a little bit less gold in our coffers than we did prior to the confiscation in 30, or after the confiscation rather, in 1933. So I'm seeing all of the signs. One of the big signs, there's always a big war. And do we not have those floating around, and the danger of even more coming up? We've got women's rights. Okay, well, that should be pretty obvious for most people what's going on with women's rights. Not great stuff, in my opinion. It's ridiculous that I had more choices than my granddaughter has. Wow. But that's happening. Civil rights, what's going on in the energy industry, the market's dropping, high inflation. There's probably a few more, but all of those things are around. And so into this extraordinarily vulnerable position, President Trump has added a tremendous amount of uncertainty. Markets like certainty. They don't like uncertainty.
So this is interesting. So you're saying there's possibly, first of all, a coincidence that Bitcoin was created around the same time that Ben Bernanke created QE1, 2, 3, and then infinity, essentially, and that we've sort of kept this enthusiasm of money printing and markets only go up going on for really the last 15 to 17 years now. And you think that Trump's sort of changing of the pH of the water, if you will, could create some form of larger shock. That's what I'm gathering. How quickly could some kind of Trump shock occur, do you think?
Well, it could be already unfolding. I don't know. What I've been saying is that I thought that we would see rather rapid inflation come back and hit us by June. It could be before June. It could be after that. But there's just way too, it's like, we were already having challenges with liquidity in the treasury markets, and that started in 2015. So it's not like any of this is really new, but the markets were, to your earlier point, with all of the, the money printing, that was, buy the dip, buy the dip, buy the dip, because we're going to push the markets up higher and higher and higher. Well, all of that is really kind of gone. And when you go in with a machete and just start cutting programs without looking at what is, and I'm not even saying that I disagree with some of the choices that he's making, but I 100% disagree with the way that they're going about it, because it's, you're creating a tremendous amount of uncertainty in an already vulnerable, overvalued, and uncertain market. So when could we see it? I don't know. Today, yesterday, Friday. Pick a day. Pick a day.
Got it. Okay. And now you think that if there is some form of a shock, that it could take the dollar down with it, rather than just some form of extended recession and then money printing again to solve it all, and just keep the cycle going on.
Well, part of that is going back to that life cycle. And my very favorite website is the FRED, the Federal Reserve Education Department, FRED. And if you go in there and you put in the search bar, purchasing power of the consumer dollar, you will see the whole story right there. I mean, I love my charts and graphs. Everybody that knows me knows that I do. But if they said to me, you can only work with one, that would be the chart that I would choose, because it really tells the whole story of the dollar right there. And you can see that originally when it came out and the Federal Reserve was legalized, you had a buck. You also, if you look at the bottom of that, the left-hand axis, you see a big fat zero. And further looking, you see that officially we're at 3 cents. So it isn't like the dollar is high, right? You can hear, the dollar is weaker or stronger against another currency. But honestly, that only matters if you travel. Every single currency is losing purchasing power on its way to zero, just like the 4,800 plus currencies before that. I mean, this is a $10 trillion Zimbabwe note. That means in Zimbabwe, I'm a trillionaire. Do you know what you can buy with this? Not anything.
Nice. I just looked at that chart too. Let me see if I can get it up here. There you go.
So if you can blow up up the access, it'll make it easier for people to see the zero.
Okay. Let's zoom in over here. Yeah, look at that. You are trending that direction. Wow, that's remarkable. Consumer price index for
Those
purchasing
gray
power. Yeah.
bars that you're looking at, those are official recessions. And you could notice that every single time that we hit an official recession, especially 2020, that decline has happened a lot faster, hasn't it?
Yeah, it definitely looks manipulated there for a moment. Jeez. And so you think, now what's interesting is I look at the 2022 segment there on the right, it looks like there's sort of been a decline there without a recession. Is that, I mean, should we have technically have been declared in a recession in 22? I mean, we had 2 quarters of negative GDP.
Well, you don't see it on there, do you?
That's right, yeah. But Biden said there was no recession.
Of course not. Look, how would you define price stability? Because this is what the central banks talk about all the time, right?
Yeah, that's a good point.
Right? And what do they say? Price stability. So how would you define that?
Well, it'd be nice if I want to go buy a carton of eggs, it would cost roughly the same amount of my my hours of labor every week.
Voila. But you know how and it was maybe 2 or 3 days ago, I actually heard Jerome Powell reinforce what Sir Alan Greenspan and Bernanke and all the previous central bankers said. For central banks, price stability is maintaining that low level of inflation so that you do not ask for more money when you go to work. And you do not change your spending patterns. Why do you think that people are so riddled with debt just trying to, put food on the table? If you have to break that every week into 4 equal payments, you're in trouble. And a lot of people are doing that.
And you think we've gotten to the point where there aren't opportunities anymore for the Fed to kind of keep that going? I mean, hey, if the tariff inflation doesn't show up, can't they just cut rates to 0 and keep the Ponzi, if you will, going for another decade? And then what do we care?
Well, I don't think it's going to be a decade. But yes, they could. And I'll go on record as saying that I'm 100% certain. I won't even give myself any wiggle room on this. I'm 100% certain that we will see negative rates in this country, because once you get all the purchasing power that you just saw in the chart, right? Well, then what's next? You got to attack principal. So I will admit that I did not see that QE. I didn't see it. So is it possible that they pull another rabbit out of their hat? Sure, anything is possible. Can they maintain that? I don't think so, because look at what's happening with the debt edifice right now. We are seeing a whole lot more defaults, and we have this huge wall of corporate debt and government debt that has to be either rolled over or reissued. And this debt was issued at much lower interest rates, and they couldn't afford that, let alone at the higher interest rates. And the banks aren't, for quite some time, we had the growth of zombie corporations, which are corporations that have not had the ability for at least 3 years to pay any of their principal, let alone all of the interest on their debts. And because the banks didn't want to show those losses on the books, they would just loan them more money to pay the interest and the principal. So let's take that down to a normal person's level. You have a credit card and you are not paying all of the interest on that credit card, which means you're not touching the principal anyway. Whatever that interest that you aren't paying now goes into the principal, and you are paying interest on interest. So you're compounding that interest. Are you ever getting out of debt?
And essentially, no, you're not. You're trapped. I mean, it is interesting, this mention of zombie companies. I wonder, I think they say as part of the Russell 2000, somewhere around 57% of companies are essentially zombie companies. They can't even, they don't make enough money to just pay the debt service that they have. So what's interesting here is this, does that mean we need to have some kind of debt or sort of like reset or flush out, if you will, and these companies go bankrupt so you can actually have profitable businesses capture that capital? That's one question. Then, of course, the second question is, when you say negative rates, are you kind of referring to like what we saw in Germany, where they were charging basically for people to deposit money on, into their bank account?
100%. And that's on both of those zombie companies. Yeah, there's with the manipulation of the interest rates, there has been such a huge misallocation of money that would, if we were in a true capitalist system, that would have gone to really growing businesses and real businesses instead of just keeping these zombie corporations alive and these zombie governments alive. I mean, I did a study in like 2009, and because I said to myself, wow, that was the first time. You can pull that up on the Fred too, deficits and surplus. And it's so interesting because our deficits were not really horrendous from 71 to 2007, 2008. And then we did $1 trillion deficit. And that was the first time that we ever did that. Now that's kind of no big deal. It's normal and it's going to get worse. But I said to myself, well, wait a minute. If we are just now $1 trillion deficit, why are we at that time? Now it's over 37 trillion, but at that time it was 13 trillion. Right. And I said, well, why are we servicing 13 trillion in debt if we've just now been running these huge deficits? So in the Fred, something else I really like about it is you can go back to all of that data and you can look at the specific data that forms that chart. And what I discovered is that exactly that. They talk about paying the interest on the debt, but they're just talking about this year. They're not talking about the fact that the interest that they haven't paid has gone into the principal, and we are really compounding interest. And now at higher interest rate levels, well, I mean, you tell me. Plus, again, I mean, that is my favorite website, because it just tells you everything. And if you look at the interest rates that they control, and there was a 40-year trend, downward trend. So every time we would hit a recession, they would drop interest rates 5.5%, 5.75%. That would inspire people to borrow and spend more. And then, that's stimulus taking on debt to do it. And it looks great as long as it works. Doesn't look so good when it doesn't work so well. But then what happened with the inflation, and all of a sudden the Federal Reserve, boom, and so did all the other global central banks, shot those interest rates up to the moon, not in a steady, which is what they prefer to do, 25 basis points, but like that. That is such a huge, major pattern shift. I cannot even emphasize how important that is. And it indicates that we're at the end. I mean, this is it. I'm sorry. Believe me, don't believe me, but the data is there.
In other words, just looking at sort of the history of Federal Reserve cycles and interest rates, you're suggesting that because we're at this sort of cliff where rates are likely about to plummet, they're likely going to respond to some kind of shock like they have every time before in history. And so you might potentially expect something to catalyze 0% or even negative rates again in the future. But I mean, isn't that a good thing? I mean, then I can finance a house at, a cheap rate again.
It only looks good in the beginning, but let's face it, at some point, all debts must be dealt with in some way. You either pay it, you at the minimum service it, or you got to roll it over, or you got to default on it. So the party has lasted this long, but what do we see now? We see a lot of rising defaults. And going back to your earlier point with all of those zombie companies on the Russell 2000, what happens when they start to really default, where the banks go, tight credit. Nope, we're just not we can't afford, we don't trust that you're going to be able to maintain this. And they stop issuing them credit. Then you've got massive defaults. What do you think that's going to do to the markets and everything else?
I mean, that's a really good point. So that's something I hadn't even recently thought of but what you're saying is, um, at some point, these zombie companies are going to roll over. Given that rates are still high, they'll have to roll over, maybe even during these tariff uncertainties, because now all of a sudden revenues are slowing even more, which puts even more pressure on the zombie companies. Forget for a moment, like the Mag 7, like, okay, who cares if, sales at Apple are down 1 or 2%, big deal. They're going to survive, but it's all the zombie ones we have to worry about. And small businesses or smaller businesses employ a lot of folks. So if those turn over, maybe then that's where we see the layoff cycle come from, actually the smaller businesses, not the Mag 7s, let's say. Is that kind of your argument there?
It's kind of a combination. I mean, look at all of the unemployment that's come out of the White House. Do you think we've felt the impact of that yet? And what about all the cutoffs for the grants and the private corporations that do all of this servicing? And now all of a sudden those contracts are gone, which means they're going to have to lay people off. I mean, I think we have just seen the beginning of this. I don't think it's controllable. I mean, I have a lot of serious concerns, concerns.
It's a good point. I mean, even a lot of the folks who took sort of the voluntary resignations, what was it, 80,000 or maybe even more, it might have been closer to 200, somewhere in that range. I know their goal was more, but those folks are technically still getting paid until September. So technically they still have a bandage between now and then. But at some point, I imagine they'll wake up and go, oh my gosh, I might not actually get a job by September if the job market is too weak, eh?
Exactly. And to your earlier point too, about those small businesses, they used to be the backbone of the jobs in this country. And they're struggling. I mean, a breakfast place, if they've got to pay, $12 for a dozen of eggs, I mean, how much are you? I mean, think about it. I go out for breakfast after I hike on the weekends, and there's 4 of us that go, and it's just breakfast, and it's like $120 bill.
Oh my gosh. Have you ever been to Kingman, Arizona?
I have been to Kingman. It's actually kind of a fun place.
The only reason I bring that up is because that is a place you could still go and get like an $8 omelet. It's the only place in the United States I found it that they still have like a reasonable breakfast. And the only reason I know about it, because it's like an airplane junkyard, is because I did my flight training out there and I love it. It's like the best. Anyway, so sorry, I'm getting distracted. but yeah, I mean,
out here. But do you come out here?
Yeah. Oh, yeah. I mean, I think I did probably somewhere around 50 flights to Kingman.
Well, okay. So when you come out here, if you really want to see something unique, then you need to let me know and let me show you some very phenomenally unique things. Like, do I look like a farmer?
I mean, no. I think you look like an economist right now. Yeah.
Exactly. But in my studies, one thing that I knew was that food is the single biggest issue for people. And so I was getting ready to retire when 2008 hit. I was in a little 2-bedroom condo that I could just lock the door and off I go. And then 2008 hit, and I knew at that moment that the system died. It was dead. And so all my plans changed, all of them. And my daughters live here and I've got grandchildren, and I knew that this is where I had to make my last stand. So I bought a property that I felt, it's just a half an acre, and it's a dead central Phoenix, but it's kind of big enough. The house is big enough that I could accommodate them. And I started learning how to be a farmer. I wasn't even much of a gardener before it. Now I have a completely urban farm, and the whole exterior is grown out. Why? Because I know that food becomes the single biggest issue for people. And when they're hungry and hopeless, they do things they would not otherwise do. So all my neighbors know, and they all participate. They can come and pick a zucchini. They can pick a pomegranate. And my hope is, because not many people really know what food looks like when it's grown anymore. But my hope is that I can feed a lot of people in there, and they don't go crazy and destructo it. But if they,
I think that's awesome, especially with kids. I keep telling myself I want to build a greenhouse in the back just to show them, like, look, you could actually still grow something yourself. Which actually kind of leads me into this question that I have for you. part of what's contributing to this uncertainty that could contribute to hurting smaller businesses and so all the downwind effects is the tariff uncertainty, which this sort of protectionist ideal is we can do everything here. Is there a downside risk of how long it would actually take to be able to do that from the side of manufacturing and otherwise?
100%. And I can tell you, in the 80s, as a new stockbroker, all of the buzz was about globalization, globalization, globalization. And I remember thinking to myself back then, I can see some problems with this. So we used to do all of that. And then because it was cheaper for corporations to go elsewhere to manufacture, and particularly once we pegged the Chinese yuan to the US dollars, well, then that was perfect because corporations could determine what their profit was going to be. This wasn't about the people. This was about making the corporations more global and richer. And so we basically shipped off all of our manufacturing. Let me tell you, it is not easy to just go, oh, okay, well, we want to do semiconductors. Boom, it's done. No, we have to rebuild all of that infrastructure. And a lot of what I'm seeing is thoughtless, right? I mean, it's like you go in with a machete, everything is going to get cut down. And you're not going to really know if you cut an artery until that artery spurts blood everywhere. And that's really what I'm seeing here. And so, I mean, let me tell you, I'm very glad that I have food, water, energy, security, barterability, wealth preservation, community, and shelter. Because no matter what happens, not only am I going to be okay, and the group around me and all of those that are getting to be as independent and self-sufficient as possible, but I also have sound money. And with sound money comes opportunity. It isn't just about protection, but I've done studies upon studies upon studies as to what happens to all asset classes during these transitions. And those zombie companies, they're going to go away. But there will be a group of companies that will survive this. And I guarantee you, where they are severely overvalued right now, they will become severely undervalued. And if you can hold your purchasing power, guess who gets to take advantage of that? That's how wealth transfers. But that's how you make the wealth transfer your way for a change rather than just letting the few have it all.
Interesting. So you think if there's some form of economic, crash or reset, one way to sort of maintain your purchasing power is through gold. Is that because you think that there would be more inflation, or is it just that in sort of recessionary times people get fearful and go into gold, and we see the price of gold go up relative to the dollar, or is it just because the dollar becomes worth less, or a combination, I suppose?
Well, it's a combination of all of the above, but let me ask you something, which is how do they deal with this debt? Because remember, it either has to be serviced, repaid, or rolled over, repaid, or defaulted on. Is the U.S. government that has the printing press going to default on it? No, they'll just print more and more of this, which devalues everything that is already out there. Right? That's what they do. That's how it's done. And so when the public loses confidence in the dollar and in those that are in power, in order to regain this confidence, and it's happened over 4,800 times, it's happening in Zimbabwe right now, right? They do that overnight revaluation because is it really like, here's my $10 trillion Zimbabwe note, right?
Sure.
It has no value, but inflation creates nominal confusion. So if you had a $20 bill 6 months ago and you have that same $20 bill today, does it buy you the same amount of goods?
That's interesting. Yeah, I one thing that I hadn't thought of is I generally associate recessions as deflationary periods, and then also sort of the people buy gold out of fear. But then the other thing I guess I didn't necessarily think of is if we go through a recession and let's say we're economically supposed to have 10% deflation, which would be wonderful for consumers because their purchasing power would go up. we would likely actually just print so much money that maybe we'd have like 1% deflation and people wouldn't really win. You would just have diluted more of the money. That's an interesting point of view.
Well, and not only that, if you go back to that purchasing power chart and you look at the purchasing power during the period of 33, you'll notice that it goes up. But have you ever read how beneficial that was to the public? And guess what? The same thing in 2008, right? You can just hone in. Here, look, you see, you're looking at 2008, right? That
Yeah,
in the middle.
Here's
Okay.
33.
Here is 33, right? You see that?
Yeah.
Was it great for the general public during the Depression? No. And you are right. There's only one way to fight. Depression is, or even a recession is deflationary. A stock market imploding is deflationary. A real estate market imploding is deflationary. There's only one way. It's not 1 of 2 or 1 of 5. There is only one way to fight deflation, and that is with inflation. So that is exactly what you just said, and that is exactly right. If you can go to 2008 and take a look at it, you're going to see the same kind of behavior, and you see it right there.
Yeah. Yeah.
There
Wow.
Now, did it get great for people in 2008?
No. Wow. Yeah, that's really interesting. Yeah, that's fascinating because it's really this idea that oh, don't worry, they're going to print more money, but you're not going to benefit.
No, this is a wealth transfer mechanism.
Wow.
So, I mean, and stop and think about it. The global central banks are buying more gold than they ever have since they started tracking it. When did they start to buy gold? Or when did they really start shifting the trend? That was 2005. 2005. Already they weren't leasing out or selling off as much gold, and you can see that pattern. So they were already preparing for 2008. And so you've got to ask yourself, when you look at that chart, and I'm happy to send you, because we just updated ours, it goes back to 1950. And goes all the way through 2024. Well, you're going to see, especially in the last 3 years. Okay. I'm sorry. Don't be to shout. I get very excited.
No, you're good.
But if you go back, now I lost my train of thought. Thanks, Arthur.
Oh, you were talking about the charts that you have from 50 to 2024.
Thank you. The last 3 years. So up until 24, I mean, there is a huge spike in the level of gold that central banks are buying. Well, okay, let's think about this for a minute. Do you think they might have a better understanding of what's happening to the money than you or me?
Oh gosh, yeah. I mean, it's funny you say that because I remember, first inflation was going to be transitory. And it's like, okay, yeah. And then of course we know the Fed's wrong about that. We saw how that played out. But what's fascinating is throughout the entire time, they've been very into giving us forward guidance and, oh, this is what we think is going to happen. And all of a sudden they're really quiet. Oh, the economy is good right now. Zip. No guidance at all. Because I personally think if J-Pow came out and told us it's going to be bad, well, then it would instantly self-fulfill. So he can't.
Exactly. And that's true for everybody that is in a position. But it's really interesting that you brought up two things that I'd like to touch on. One is the transitory, because presumably the tariffs will only be a one-time price hike. Well, I just did a piece on that, and that's not really true. Prices aren't going to go down. It's not a one-time hit, and then the prices fall back down. They just keep going up. And we all know that because President Trump put those tariffs in place going back to 2018. Prior to that, we didn't have a tariff war until World War II. And then prior to that, it was in the 30s. So we have history on that, and prices have prices calmed down? Have they gotten back? No, maybe some of them are just moving up a little bit more slowly. But I wanted to bring this. This is not a one-hit wonder. If the tariffs do get imposed, it's not going to just impact us for a heartbeat of a second, and then the prices are going to go back. It's not the way it works. So don't believe them. You can believe it the same as transitory. But the other point that you brought up, which is a brilliant point, seriously a brilliant point. This whole monetary and Wall Street system is a con game. Con games require confidence. And in 2008, you were talking about the forward guidance, right? Mm-hmm. That's when that policy came into play after the GFC, Great Financial Crisis. But what we've actually been experiencing and witnessing since 2008 is that there are a number of layers of confidence, and they've all been going away. So in 2008, it was the interbank lending. So banks lending to the other, banks lost confidence in each other, and they don't even report that anymore. It dropped off the cliff. You can find that in the Fred as well. It dropped off the cliff. It's done. But bank-to-bank confidence gone. Then in 2015, the Swiss had pegged their currency. There's a whole long story on it, but the Swiss had pegged their currency to the euro. And so they kept coming out and vowing that was like the most important policy that they had. They were going to maintain that peg. And then 2 days after they came out and said it was their highest priority, bam, they shifted it. So that was central bank to central bank confidence. And you might have noticed the synchronization, right, that all central banks were doing starting in 2008, right? So that piece was gone. And then I believe it was June of 22 when the central banks kept saying 50 basis points, 50 basis points, 50 basis, and all of a sudden they did 75 basis points. So no more markets to central banks. And then they all came out. It was the Bank of England, the Federal Reserve, and the ECB all came out and said, yeah, no more forward guidance. That's why you haven't seen it. They changed the policy. But
interesting.
Yeah, it's fascinating. We could not be alive during a more interesting time. And there's so many opportunities that I see ahead if you're in the right place at the right time with the right asset. You got to hold your purchasing power.
And so on the asset talk we know gold is one option. What about people who like real estate or Bitcoin? Maybe we can talk about each of those.
Sure, we can. Okay. So you saw on the purchasing power chart that nice little zero as far as the true value, right?
Right.
So anything that you can only convert back into this, that's the real trend, not it going up. That's what you see and you get FOMO, but you got to look at the purchasing power, because I go back to my $10 trillion Zimbabwe note where you can't buy anything. So when I look at something like Bitcoin, and again, coincidentally, when it came out in January, and I've really seriously been following Bitcoin since it was $7 a coin, but my feeling on it always was that it was a Trojan horse that was put in place to get us ready for the next digital system, because we are shifting systems. When one goes away, another one has to pop up. I'd like us to have a say in what comes out, but Bitcoin, what color is this? This is my Bitcoin, right? It's not real gold, but why are cryptocurrencies, the color of them, gold, silver, or platinum? Why aren't they purple and orange and blue? Because gold and silver, they're in our DNA. They're deep in our DNA, whether we realize it or not. So they do that to gain confidence. And the way that they allow things to run is, lots of money is made in this stuff, right? Lots and lots, Bitcoin billionaires, what have you. Well, where's its utility? Because I've had a lot of people try and talk me into it. And that's always my question. It is great utility to be able to put your Bitcoin on a little thumb drive, put it in your pocket, and go anywhere in the world and have access to it as long as the grid is viable. That is a really good function. Though I could do that with this as well. Just get a super duper rare coin. I think I don't know what the most expensive coin is, but some of these have gone 1 ounce of gold for 15 million bucks. I can stick that in my pocket and go. Also, all these cryptocurrencies, while they were sold as going around the system, do you really think they're around any system now? Because they've been really adopted into the system, and they are being legitimized, they are being legalized, and they are being set up, but there's still a potential surveillance money.
Interesting.
Additionally, they take a tremendous amount of energy. And when they use that energy is used up.
So this idea, I think what one of the interesting perspectives that you have is this, okay, we want to be able to convert it into something with function. So you mentioned that you can barter with gold, but I mean, couldn't you theoretically barter with Bitcoin? Or are you making the argument that you can, as long as blockchain is accessible, and if somebody else has control of it, potentially maybe it's not, even though there's the decentralized argument of, oh no, it's, nobody has control of it.
There's this bridge in Brooklyn, if you really believe that we could talk about. But yes, except let me take this a step further, because this is used in one place. It's used in the financial system. And right now it should be pretty obvious it's a risk asset, right?
Mm-hmm.
Okay.
There's no doubt about it. It's definitely a risk asset. The biggest concern I have for it is that it's never actually gone through a real recession outside of like COVID. But, what was that, right?
It hasn't. But gold and silver are used in every single sector of the global economy. So it isn't just a tool of barter, and I'd be bartering more with this than with this. So therefore, it has the broadest base of utility. It's used in space travel. It's used in solar. It's used in electronics. It's used in medicine. It's used in food. It's used in the financial system. It's used in art. And there are probably some more. It's used in every single sector, and they have never been able to duplicate the qualities in both gold and silver. So they are utilized. And because it's used in every system, it has the broadest base of demand. So this
even diamonds have been duplicated with cubic zirconium or whatever, and they're actually pretty good. Or man-made diamond drill bits, for example, they're all man-made. You're right. We don't have man-made gold or silver. That's a fascinating argument.
Exactly. So, if you're going into a fight, what do you want? You want a penknife or you want a bazooka?
Got it. Okay, so how does real estate fit into that?
Love it. I love that question so much. I've done so many studies on real estate during these transitions. Globally, on average, 25 ounces of gold would buy a city block buildings in all during, I think we're going into a hyperinflationary depression. And that's why if you hold your purchasing power, you can convert into it. So real estate basically runs a couple of risks, and another risk too, if you're generating income from it. So let me speak to each one of those, right? One of the risks it runs is mortgage risk, because during these periods of time with hyperinflation, then banks are all of the banks are so underwater from all of that debt and the mortgages that they're holding at zero interest rate policy for 15 years, right? Even the central banks, they're all underwater. They're all in very bad shape because of that, right? So what happens is interest rates then get modified. But in this country, we've got those nice 30-year mortgages, although a lot of them got reset in 2008, didn't they? And who, right? Who reads those big fat contracts? You want to buy the house? Initial here, initial here, initial here. People don't read those contracts. And if you don't read them, how do you think they're written? So part of the strategy, we execute a sound money strategy at Zang Enterprises that are based on all of these repeatable patterns. So all you need to do is have enough gold so that when they do that first overnight revaluation, bam, you just pay that mortgage off, and you are not in jeopardy of losing your home or having to reset that mortgage on even heavier, more onery terms, right? It's significant. Additionally, the other risk that real estate runs are property taxes, because how do governments, state governments, local governments, federal governments, how they generate their income? That's taxation. So you need gold. I like fractional gold for that, to maintain your ability to always pay those taxes. Because let me tell you, during the Depression, you could have had that house paid off. And if you couldn't pay your property taxes, you lost the house.
Right.
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 Now, there are a lot of people that are generating income from these properties. So they're the landlord. All you have to do is take a look at what happened during COVID, right? And landlords couldn't charge money, and people they didn't even have to pay their rent, but the landlords still had to maintain the property. They had to pay the taxes. They had to pay the insurance, utilities, all of that. So part of the strategy is utilizing gold to replace that income, because you also do not want an empty building. Empty buildings deteriorate much more quickly than buildings that are cared for. So in my opinion, you want to be in a position to have a really good tenant in there and be able to help them over that hump so that they can help you maintain that property. And guess what you have on the other side of it? A really loyal tenant.
Yeah, no kidding.
Right?
Yeah, that's a good point.
So it's part of building community. If you have to have a place to live, then you go back to that first part of the strategy. Even if you're paying too much for this property, if you have the gold to pay off that mortgage when they do that first overnight reset, you're still repaying that debt with dollars that have no value.
What do you think about this idea that Trump is, just sorry to jump in there, just putting us through this short-term like shock of pain and uncertainty almost on purpose to create this investment boom reset that will finally make America great again?
Well, are you going to be in a position to take advantage of that boom? Because while I definitely do agree that on the other side of this reset, I mean, and even going into it, it's why I try to teach people patterns to look for.
Yeah.
There are going to be major opportunities. But if you are in a full surveillance currency and they don't like your opinion or your politics or anything else, I mean, the new system that's going in, if you don't have any principle to work with, what do you do?
Yeah.
If you can't take advantage of all those opportunities, what do you do?
I mean, it's a fair point. I mean, if somebody, let's say, made a lot of money investing in a certain stock, and then all of a sudden they lose their job and a recession hits and the stock is worth 95% less, cool, rates are 0%. Go qualify for, oh, wait, you have no down payment. You have no job. So who gets to? The rich people. It's kind of like capitalism somewhat, the idea is that it raises the standard of living for everyone, but through the boom and bust cycle, it seems like those who aren't prepared for the bust just get wiped out.
Yep. You're absolutely right. So while I know that I'm talking about really ugly, nasty stuff, it's just inevitable. I mean, one of these days, frankly, I think I'm going to make it to 100. My grandfather made it to 99, and I take good care of myself. So I think I'm going to make it to 100. But one of these days, I'm going to die. That's what's going to happen, right? It's just a normal course of life. And if people could just understand that everything has a life cycle. And what does that look like? Then well, what's most likely to happen next? And how can I get in a position to take advantage of it? And oh, by the way, how about setting yourself up? What if I'm right? And what if I'm wrong?
Right.
Hopium is not a good strategy. Hopium is not a good strategy, right? You have to be prepared.
Now, do you think that the Federal Reserve is going to respond rapidly or slowly to some of this uncertainty that Trump is causing?
You know, they really are between a rock and a hard place, right?
Yeah.
Because on the one hand, they all want to lower rates. And I am seeing globally central banks that are, and we did it too, actually, lowering rates into an already very loose monetary system. And that's not a good thing. They're not getting rid of inflation. They just want you to think that they are fighting it so that you continue to trust and believe them. But on the other hand, you know, here's how interest rates work. You want to stimulate borrowing and spending, you drop the interest rates. You want to reduce that, you raise the interest rates. But that didn't work this time. Why didn't it work? Because there was so much money that they already flushed into the system. And it's not like once they create it, it disappears. It just sloshes from this hand to this hand to this hand, right? So
yeah, that's interesting. This idea that, oh yeah, we'll raise rates to, depress some of the spending and the demand a little bit. But boy, people had plenty of money available, at least, over the last few years, maybe not anymore, to just keep spending. So what damage did rates really do?
exactly. And that's because they had just printed so much money, they kind of negated their power. If there was less money in there, it would have had a bigger impact. But we're at the end of the system. That's why, haven't you heard lately where people will go, and I'd say this is over the last couple of years, really, where they're going, wow, that's unusual. Wow, that allocation, that used to work just fine. All of a sudden, it's not working. Oh my gosh, gold and the dollar going up at the same time, or gold in the stock market. Oh, how's that happening? It's because we're at the end and things aren't working the way that they did when they had less money in the system, less leverage and less debt in the system. It's just not working anymore. So, I think that the Fed is between a rock and a hard place, and it doesn't really matter what they do, raise or lower the interest rates. Hyperinflation is here. I'm sorry. It just is. And look at the monetary velocity also in the Federal Reserve Education Department. And you will see a massive pattern shift that occurred with the speed at which money changes hands, right? So people are getting the money into their hands and they're spending it as quickly as they can, either for necessities or because they know that the prices are going to go up. That's the kind of thing that happens in a hyperinflation. So here, I'll put my technical neck absolutely positively on the line. And I personally believe that we have already begun to enter that hyperinflationary phase. It's just not publicly apparent yet. But I think it will become more apparent by June, and we'll see where we end the year.
Okay, June. So why June?
That's just the date that's come to me because it takes a minute to work through the system. And the impact of the tariffs, if they go through all of that, then first it goes into the manufacturing index, right? So those prices go up, and then the public should start to see it. So it's about a 3-month window typically, and so that's June.
And you're already seeing some of this weakness reported from companies like Best Buy, Walmart, Kohl's, these companies warning, even the airlines just recently warning about a consumer that's starting to roll over. Is that potentially a transitory rollover? Do people just stop spending for a moment while things are uncertain? And if the Trump tariffs kind of settle out, are people going to go right back to spending, or does the cycle not necessarily work like that?
Well, they could send out those $5,000 Doge coins or, checks.
The stimulus checks.
Can stimulate again.
Yeah.
And that might help for a minute. I mean, it has in the past, but basically, no. I'm sorry. You saw the purchasing power chart. I mean, how close are we really to zero when they finagle the numbers and the formulas the way they want? We are just the loss of public confidence away. And that can happen with rapid inflation, especially where we are right now.
Wow. Now, we're coming up on an hour here, and I have to ask, when are you getting your Cybertruck to support Doge and Musk?
I have no intention of getting a Cybertruck. I have, call me crazy, but I've never been a big Musk fan. And that's still true. Yeah, I mean, I think part of that, honestly, has to do with watching my sister who had a toy store for, 40 years, which is pretty amazing to stay in business for 40 years to begin with, and how Wall Street allowed companies, including Musk and Bezos and all those guys, they didn't have to make money. They could come in and they could run with losses, and Wall Street kept funding them and funding them and funding them.
Right.
They didn't have to charge sales tax, right? A mom and pop shop, they have to make a profit in order to stay in business. There is nobody that's going to keep funding them. And that's what I saw with Musk. I mean, he ran losses, a lot of losses for a really, really, really long time. But here's something else that I'm really curious about, and I haven't really spoken too much about it recently, but these large corporations, when they take on debt, a lot of what they use as collateral for that debt are their stocks.
Yeah, of course. So basically, it turns into not selling the business product or service, it's selling the stock.
But what happens when that stock drops so dramatically in value? That's a problem if it's used as collateral.
Well, now you got to ask yourself, what's going to happen to Michael Saylor in the event that Bitcoin drops? Yeah, that's going to be an interesting one, because that one, I mean, that company almost, I mean, the company itself loses money on the service they provide, and the product of really that stock has been, let us finance the buying of Bitcoin. And it's not like they're, picking up the Bitcoin by mining it out of a, quarry and then polishing it and storing it. It's literally a 2-minute blockchain transaction. There's actually no effort or service that goes into it. So it's this transfer of people buying a stock to a company or from a company, providing them cash to essentially go buy more Bitcoin. And the company's not really doing anything to it. It's very interesting. It works really well in a bull market, I would argue.
Yes. Works fabulous in a bull market. You can still expand your leverage on the same Bitcoin or the same stock. But I mean, it'd be really interesting to see, but of course we never will. I mean, Musk stocks dropped about 45% so far this year, right? Isn't it something like that? And I don't know.
It's shot up quite a bit there on the Trump win, but you're right. It's given back almost all of that now.
And what we don't know is at what point and how much of that stock was used for leverage for his debt, because from everything that I had seen, he uses a lot of leverage. And of course they can, because they're closest to the money machine, right? And they can get it a lot cheaper than you or me, for sure. But yeah, it's going to be it's going to impact a lot of banks. Yeah.
Oh, that's a very interesting you say that, because we just saw, who was it? I think it was Morgan Stanley. They're trying to sell at, I think, somewhere between a 5 to 10% discount debt that they helped, that they issued to Elon to buy, Twitter, now X, which is interesting. Here we are at the beginning of 2025, just as some of these tariff policies are coming in, and all of a sudden, hey, it would be great for us to offload some of this Twitter debt.
Yep. And
wow.
To the point, banks have been, they call it their risk management, taking this debt, the risky debt, turning it into a financial product and selling it to the public as well. So at the end of the day, who ends up eating the losses? It's always the public. Private equity. I mean, I'm watching private equity. I've been watching it for a while, and there are a lot of parts of that make me, I'm not going to lie, pretty darn nervous, especially now that the easy money's been had. And so now they're really selling it to the public. That's all about risk transfer, because it's not so easy for them to get that money. But hey, haven't the public watched how much money's been made in private equity? So why not put my money in there?
Right, right. Wow. That's yeah, that's fascinating. So what else are you seeing out there? And how do, people learn more about you and your ideas?
Well, I'm very, very active on YouTube and Twitter at the Lynette Zang, and on Instagram and Facebook at Lynette Zang. I'm also a member of the Sound Money Movement Advisory Board. So we're trying to get gold and silver as legal tender, remove those taxes in the states, because then maybe that'll pressure the federal government to think more about it. But also on a global basis, I really am part of the global sound money movement. I travel quite a bit, letting people know about it. Because if we can get 3% of the population to just take that fiat garbage and put it in here into sound money, then I'm thinking that we might have a shot at having a say in the next iteration of money. And if I'm sitting at that table, I'm not saying I will be, but I'm working on it. I don't know. We'll see. But if I'm at that table, not only will it be backed at least 40% with gold, but that gold will be convertible. So that if you don't like it, even if it's a digital currency, if you don't like what the government, the bankers, whoever's doing, you can pull it out. We've got to take the public. We have to take our power back. We have to. It's the only
bonds
thing.
are probably not interesting to you.
No.
Yeah. Although you do think that rates are going to go negative. So in fairness, a 10-year bond today, if as long as rates go negative within the next 10 years, would actually probably perform pretty well.
Well, in terms of dollars, but if the dollar has no value, right? So yeah, interest rates go up, the market value of the bonds go down. Interest rates go down, the market value of the bonds go up. But if you're in this, and that has no value, here's my $10 trillion in bond I know, right? What difference does it make? What difference does it make? So no, I'm not interested in bonds. That's what I cut my teeth on when I first became a stockbroker, treasury bonds, because I figured, I didn't really know very much then. And so I figured I couldn't really burn anybody while I was learning how to, about the markets and everything. That worked well back in those days. We were like on a 10-year bond, don't hold me, or note. I think we were about 8.5%, something like that. Nobody ever talked about you using up your principal in retirement, because back then rates were nice and high. So you could if you had $1 million and you put it in there at 10%, $100,000 a year back in the 80s, that was a lot of money. Today it's paycheck to paycheck, right? But back then, and that's because of the value of this, because that's the only tool they really have is devaluation. Now the confidence is the only thing that's holding the system together. And it's been eroding for a long time. It's something that I track, and it's something they track, right? Inflation expectations, right? Consumer confidence. So, yes, we also I'm sorry, I went on a little bit long, but we also like direct conversations. So 833, I love this name, GLD ZANG, or 833-453-9264. I'm very accessible. I'm all over the place.
That was 833. Just so everybody knows that this is just a conversation, not sponsored. But I want to put this up. That's a phone number, GLD Zang, right?
Yep.
Okay, here I'll put it on screen for a moment. Yeah, I mean that's interesting, because what you're really saying is the uncertainty of what's happening with some of these initial Trump policies, whether they're good or not for the long term. What matters most is the damage it creates for small businesses, zombie companies, the massive debts that banks hold on their balance sheets from potentially toxic assets, whatever that may be, and those bills could come due through some form of uncertainty shock, basically. And in such a shock, rates will very rapidly likely go to zero, maybe even negative at some point in the future, which I wouldn't be surprised either if that happens. But protect yourself essentially, and just be aware that something like that could happen. And the catalyst accelerating that trend, which may have already been happening, could at the moment be Trump.
It could be, but let me also be clear. One person didn't get us into this. One person isn't getting us out of it. So it wouldn't have mattered to me who got in the White House. That wouldn't have mattered. This is inevitability, just like me eventually dying and everybody that's watching this eventually dying. This is a currency life cycle issue. This is not created by one person. It was legalized in 1913. We're at the end of this, and we're going in. This is kind of like the Industrial Revolution, and that's what we're going into, the digital revolution. So, I mean, it's the best time in the world if you know what's happening and you can get into position. I mean, I'm grateful to be alive at this period of time. And I'm also grateful to be as old as I am, because I have all of that history that I can draw on, living through 1971 and the currency regime shift, and being a stockbroker I was there on Black Monday. It was the best day I could have ever been a stockbroker, let me tell you. And so I'm grateful for all of that. And I'm on this planet to be of service, to be honest with you. That is why we're all here, to share the gifts that we've been given. I've been given a lot of gifts, and I like to share. So I'm very accessible.
That's amazing. Well, golly, thank you so much. Really appreciate that. And your website, Lynette Zang, I think, is your website Lynette Zang? Let me see.
It is LynetteZang.com.
Okay, perfect. Yeah, I want to make sure I got that right. Okay, perfect. LynetteZang.com. You can also Google it. The Zang Enterprises. Awesome. Well, thank you so much. It was a pleasure to have a conversation with you. I look forward to having a conversation with you again in the future.
Absolutely. And I hope when you come to Phoenix, let me show you some stuff. We should do some live stuff together. You'll like it, and your viewers will like it too.
It'll be amazing. We'll do a vlog at your house or the farm. I want to see it. I think it's amazing. So we'll thank you so much. And everybody, thank you so much for watching. We'll see you all in the next one. I'll go ahead and end the stream now. Goodbye, everyone.